Winter is coming. No, this is not a new Game of Thrones episode. That's going to make up for the disappointing last few seasons of that phenomenal show. This is kneppyinvests, and winter is coming. We are now into April, and this changing of the seasons is my favorite time of the year because I eventually do become sick of the heat and humidity of summer, and I do long for winter. And the same thing happens actually in September. I actually do long for the heat and humidity. So I'm one of those people who always wants change, and that's why I love this time of year. But there is actually another reason I love April, and it's because it is Appendix 4C month. It comes 4 times a year, and April is one of those months. So, as a homage to Appendix 4C month, I'm going to give you 4 ASX stocks to watch in this video, and then I'm going to give a second episode and give you 4 other ASX stocks to watch in this month. And all these 8 companies, the reason I'll be talking about them is because they will all release an Appendix 4C later in the month, and I'm excited to see how they're doing. So let's get into what Appendix 4C actually is, because some of you might not know. Yeah, so it's a good question. What is an Appendix 4C? And the simplest way to put it is a quarterly cash flow statement. So every single company on the ASX has to give out a half-yearly report and a yearly report, and within that there are financial statements. So, and one of those financial statements is a cash flow statement. So all companies have to give out a yearly and a half-yearly cash flow statements. There are some companies on the ASX who actually have to give out that cash flow statement 4 times a year instead of 2. So what are those companies? Well, typically they are small cash flow negative companies. And that's the big thing here, cash flow negative. And what I'm looking for is those companies who have been cash flow negative, who have or are transitioning into becoming cash flow positive, because I found in the past that's an important inflection point for a growing company. So in a cash flow statement, what you usually find are cash flows from operations or operating activities, investing and financing activities. I'm mostly concerned with the cash flows from operating activities. Now, there are 4 months there where companies have to release Appendix 4C, and they are in January, April, July, and October. So they have to release their Appendix 4C by the end of the month. Now, what do I look for in an Appendix 4C? So the first thing I go straight to is the cash receipts, and actually that is the first line. And then in the operating activity section, we'll see if they're operating cash flow positive or negative. Now, in the investing and financing activities, I also do look at the capital expenditure, which is in the investing activities. I also look at cash on hand to see if that's increased or decreased compared to the previous quarter. I'm also looking at the loans, because sometimes when you look at the loan particulars, you can see some not weird stuff there, but you can see how much interest they have to pay on these loans. And for some of these small companies, even though the interest rates are really low right now, sometimes the interest rates on the loans they have to repay are upwards of over 10%. So you can see, even though interest rates are low now, sometimes companies have really bad loans with exorbitant interest rates they have to repay. And I like to see what companies have those sort of loans. The first company I'll be looking at today is Jatcorp. Now, I used to know this company as Jat Energy, and for some reason they changed the name to Jatcorp, mainly because probably the word energy in the name would give people the wrong impression, even though what they do, providing food and drinks for consumption, food is a source of energy for the human body. Most people don't think of energy in that sense. They think of energy in the sense of oil, gas, that sort of thing. So that's probably the why they changed the name to Jatcorp. Now, I have been following this company closely over the past few years because the share price has been in a well-defined downtrend during that period. In fact, the share price has gone from 25 cents all the way down to 2 cents, which it is currently. But we've potentially seen a bit of shift in sentiment in the last few months, particularly in February. We saw an explosion in volume in February. You can see that in the chart there, the massive increase in volume. And it did translate to the share price increasing from 2 cents to 4 cents. But that volume dried off, and then the share price has gone down lower as well. But that could be a harbinger of potential share price appreciation in the future. And that's exactly the sort of thing I am looking for. So that's the first reason I've become interested in Jat. The second reason I've become interested in this company is the cash receipts. So even though the cash receipts have been going down over the past year, and I think COVID-19 has not been helpful for this company, we have seen a potential shifting trend in the past quarter. So October 2020 was the low point in their cash receipts, and then the cash receipts did grow in January 21. So is that trend going to continue in the current quarter, or the quarter we just saw come to completion on March 31st? And that's another reason I'm interested in seeing the Appendix 4C for Jat. Is this trend in cash receipts growing going to continue? And is that why the market became interested in February? I'm not sure. It could have been a different reason, but that's the two reasons I'm interested in looking at the Appendix 4C for Jatcorp. The second company I'll be looking at today is Lark Distillery. Now, I don't know much about this company also. This is a company that's just come onto my watch list, and you can see why just looking at the chart. The chart looks pretty good. It's gone from $1, so this is going back about 9 months. It's gone from $1 to $2.35. A nice, well-defined uptrend, and we actually have seen a couple of explosions in the volume, particularly in September of last year, where we saw that massive peak in volume. So something happened there. I should take a look. And then we saw the share price actually go sideways for about a month. That would have been the ideal time to buy, because you saw no selling. And when you see no selling after increase in share price, that's actually a good sign. So Lark Distillery has market cap of 145 billion, revenue of only $11 million in the last 12 months. But when you look at the cash receipts, this is another reason I've become interested in this company. Cash receipts growth has been phenomenal over the past few years. In fact, it's been growing at 35% per quarter, and we've seen a bit of acceleration in that growth over the past few quarters. In fact, between October 2020 and January 21, we saw the cash receipts going from 3 million to above 4 million. So that's a really good growth in the cash receipts, particularly at that level. So cash receipts back in January 2018 were on a low base, and that's another reason why the cash receipts have been growing at 35% per quarter, because it's off a low base. So definitely this is a company I'm going to have to do a little bit more research on, and it's definitely now been put onto my watch list, and I'm interested to see what happens with their cash receipts in the next quarter. Can they continue this growth rate moving forward? Now, while I've only just put Lark Distillery onto my watch list, this company, Frontier Digital Ventures, has been a company I've been following for quite a while. They have a market cap of 465 million and only revenue of 21 million. So maybe that's a reason I haven't taken a position in this company. But what they do, I am interested in. So they are an owner and operator of online marketplace businesses in emerging markets. So a couple of things there I'm interested in: online businesses and emerging markets. So the share price has been going up. So this is the sort of chart you want to see. But we have seen a bit of weakness in the past few months. Share price has gone from $2 all the way back to $1.38. So if this does fall further, I'll become more and more interested in this company. And when you do look at the cash receipts, it's been going well over the past, we'll say 3 years. It's been growing at about 8% per quarter. So not extreme growth rates, but it's gone from 3 million, and the last quarter we did see it go above 7 million. So I am interested in this company, see how they are doing in the most recent quarter, because you can see in the last 3 quarters phenomenal growth in their cash receipts. They were affected by COVID-19. You can see that in July 2020, and they've come out of it at a real rapid growth rates. And I want to see if they can maintain that growth rates, or if the growth rates just level off a little bit. They have made a few acquisitions recently. I think they made an acquisition in regards to a Chilean online business. So I'll have to do a little bit more research on that acquisition. But this is definitely a company that's been on my watch list for a while. It's going to remain on my watch list, and potentially I'll, at some point in the future, will make a purchase of some shares in this business. And last company I'll be looking at is MCS Security, ticker code MSG. This is a company I have owned for a few years, and the main reason I bought this company was it was a high reward, low risk play. When I bought them, the market cap of the company was less than $4 million, even though they had growing revenue, they had growing cash receipts. So I thought if they can maintain that sort of growth going forward, the market cap of the company wouldn't get any lower, and it hasn't. It started to grow. In fact, it's more than doubled since I bought into them. You can see that growth rate in the chart. The share price has gone from 2 cents and reached a high of 6 cents in February. It's pulled back a little bit in the most recent month, but that's a little bit of weakness on very low volume, so that's not a concern at all. And the market cap at these prices is still less than 10 million for a company that is growing revenue and is growing cash receipts. And the growth in cash receipts I've got there on the top right, and I have data going back all the way to 2016, so 5 years of data, and we've seen cash receipts growing at a very consistent rate. In fact, it's been growing at 11% per quarter during that time period. So if this company can maintain that sort of growth rate, I have no doubt the market cap of this company will be higher in the future, particularly because they have been suggesting they are looking into acquisitions. They do have licenses to expand their business into other states. So currently they're mainly in WA, and if they can expand their business into other states, they will grow their business moving forward. So for all those reasons, I am a shareholder, have no reason to sell, and I'm very keen or very interested to see what sort of growth rates they can have in the next quarter. So that's all for part 2 of 8 ASX stocks to watch in April 2021, a homage to the fact that April is Appendix 4C month. So I'm looking forward to the release of all these Appendix 4Cs that these companies will release towards the end of the month. And more than likely, it's going to be the last week of April that we'll see these quarterly cash flow reports released. Now, I'm not a professional advisor, so if you do, or financial advisor, so if you do need financial advice for your own circumstances, make sure you seek out someone who is qualified and can speak to your own financial needs. That's all for this video. Have a good day. Bye.